terminal illness and they're not going to survive a year, 2 years, something like that, do you then set up a meeting with them to go over the living benefits in your policy?
Well, we invite our customers in once a year to go over everything associated with their policy. Now, whether or not they come, all of them not going to actually come. Now, there's no way for an agent to know that a client has a terminal illness unless that's disclosed to them, because, as you know, medical information is a private matter. So if that's not disclosed to the agent, there's no way they can act on that information or advise. But if somebody is in a situation where policy is going to lapse, we look at that policy, we look at what's available to them, and we give them all the available options, because the choices have to be that of the consumer in terms of what they want to do with that policy. My responsibility as an agent is to advise them as to what's available. Then they can make the choice.
You don't have to be an expert on life settlement, so to speak. Then you can give them, if that's a particular option, you can give them a list of companies, or say there are 40 companies out there who do this.
Well, I personally, in my 27 years as an agent, I've never had the situation where somebody was terminal and they've come to me with that. Okay. I don't have a list of life settlement companies in my hip pocket or in my purse that I could give to them. And you got to keep in mind, as already been stated, your average consumer does not have high dollar life insurance policies. And of course that depends on your client base and where you are. You know, most average working Georgians don't have the $1 million policies or the high dollar policies where settlement companies would be interested in those kinds of clients. So it depends on where the agent is, what the client base is, and all of that. But in order just to have everybody to send out notice to every policy, as these triggers indicate, we'll be sending out information to people who it really doesn't apply to. And, you know, there's a cost associated with sending out the notices. The agent will have to then explain to them about what could be done, but it doesn't really apply to you, and that kind of thing. So that's just where I am, Mr. Chair.
Do you mind?
Go ahead.
So, Representative Hughley.
What number?
6. So, Representative Hughley, you're saying that, I'm just going to throw out a number. So if you had a client that had a $50,000 or $100,000 policy well below $1 million, whether it's term or whole or what have you, this proposal, what we're talking about, is requiring a disclosure to be sent out, even though that might not be in the market for people that would want to buy these type of policies. Is that what you're saying?
For example, there is a disclosure if a person wants to take a loan on the policy. Okay, Mr. Smith has a $50,000 life insurance policy, and little Johnny is away at college and something terrible has happened and he needs $1,000. He comes in, wants to take a loan against the cash value of his policy for $1,000. We can cut the check for $1,000, give it to Mr. Smith. He's on his way. If this were the case, I'm going to have to sit and talk to him about life settlements when that is not what he's trying to do. He's not terminally ill. That's not his situation. But this would require that as part of that transaction, I would have to sit down and go over the life settlements with him, which in my mind would not be appropriate in that situation.
Okay, thank you.
Okay. Any other? Eddie? All right. Thank you, sir. All right. Prudential. Is anyone from the Insurance Commissioner's office here? Okay. You're going to speak too, right?
I'll have a few things to say.
Okay.
Thank you, Mr. Chairman and members of the study committee. My name is Reagan Marsh. I'm with Troutman Sanders. We represent Prudential, and they submitted a letter to the study committee. I'm also here on behalf of the Georgia Association of Life Insurance Companies. Both of my clients agree with the statements made by ACLI. I will add on an additional statement on behalf of Georgia Association of Life Insurance Companies. The majority of those members are domiciled here in Georgia, And as such, they pay the premium tax rate here in Georgia, which is one of the highest in the nation. They also pay that same premium tax under the retaliatory tax theory for any products they sell in other states. So any additional cost to a product that's already been priced is a concern for them, and because of that, they oppose the bill that was introduced. And I'll take any questions you have also.
Okay. Look, I don't see any lights. Thank you, sir.
Thank you, Mr. Chairman.
Okay, the Leto Insurance Company Agency, Lettow. Okay. Don't see them. All right, insurance commissioners, introduce yourself and.
Thank you, Mr. Chairman. My name's Trey Sibley. I'm the Director of the Division of Insurance and Financial Oversight. Subbing in today for our soon-to-be lobbyist. Hopefully I will be able to be helpful to any questions you might have. I think I'll start out by saying that, generally speaking, this is all about providing information to people so that they can make informed decisions. And I think that there's no disagreement that that ought to be the object of any policies. And to the extent that that's not happening, that's something that is appropriate to be before this study committee and is obviously what's being studied here today. So from the department perspective, ideally speaking, anyone making a decision either to purchase an insurance policy or to sell an insurance policy or to choose other benefits available under that insurance policy, all of these decisions should be made with the most information as is possible given to them in the most straightforward and easy to comprehend way. As part of what I want to tell you a little bit about, I think going over what the law is right now might be helpful. And so maybe I'll just run through a few statutes that I pulled out. I also spoke with our Assistant Director of Product Review regarding this issue. So we kind of compared notes on our memory of where all the specific provisions were in the code, but also some practical things on, how sometimes specific provisions aren't in the code, but it happens in the industry. I think starting with if you don't pay your premium, what happens? And it was ably described earlier. The statute, though, is not all that specific. If you go into the code, it's 33-25-3, grace period. And essentially, you're entitled to a 30-day grace period, but there's no mention of notice. And so to the extent that notice is given, it would be something that's provided for in that contract, not necessarily by positive law, either in the statutes we have in our state or through the regulations that we've adopted. Some standards which are generally applied, the NAIC standards, even if they're not expressly adopted by the state, a lot of times they will be used to supplement any silence on the part of the state and dealing with an issue. But as far as the status of our statutes and our regulations, there's really nothing that specifically addresses, are you going to get a letter at your last known address in the instance of a grace period. I suspect that you are, but it's not something that you can say is specifically provided for in our statutes. Oftentimes, when a policy will have a cash surrender value, you're going to have automatic loan, and that's something you can opt out of. If you don't, when the loan starts to pay the premium, so you start eating up that cash value of the policy because you haven't paid your premium, you should get a notice. And that's provided for under 3325-3.1, reasonable notice, so probably 30 days around that time. In addition, non-forfeiture law. We have a pretty long non-forfeiture law. It's provided for in Chapter 10 as far as the assets, and that's the reserving side, but also as far as notifying the consumer of the benefits, and that's available in let me see, 3325-4. And so those are things such as if you want to get the cash value out of the policy, you can take that. Or there are other settlement options available in most policies, interest-only option, some form of structured payment. And so a lot of that is driven by our non-forfeiture law. Lastly, where we have a lot of, I would say, disclosure requirements is at the front end of the contract. And so in Georgia, we've adopted NAIC model on life insurance solicitation, which includes a buyer's guide. I can leave a copy, and I think I forwarded this to Legislative Counsel after the last meeting, but it will tell you a little bit about the disclosure we require on the front end of the contract. And in addition, as part of that disclosure, it does have a few measures. It's called indexes, so there's a to help you make an informed decision, an index on what are the surrender costs and also the premium costs, and it's a calculation that can be useful for people making a decision about purchasing a policy. And as part of that, you will get obviously an explanation of what's included in the policy, hopefully pretty straightforward and meaningful explanation so you understand exactly what you're buying. What is not really specifically addressed in a lot of the law when you look through it is what's happening necessarily on the back end. So, or frankly, during the period what's being discussed right now where someone's trying to decide what to do with the policy in the worst case scenario if they're facing some sort of shortened life expectancy or some other circumstance which requires them to look around for marshaling assets and looking for values in their net worth. So the laws are there that are pretty general, I would say. So that's what is in our code. But I would say that a lot of the things which you'll normally see in your policy are generally supplemented through NAIC stuff or just through practice. Generally, practice and the market will enforce some discipline as far as keeping people informed of things such as paying your premium. Obviously, that's there's a lot of bad publicity that comes with a situation where companies would take advantage of that. But in any event, I can take any questions you might have, but that's essentially what we have prepared at the departments.
Could you send each one of the committee members that same document you sent Legislative Counsel?
Yes, I can. I will send all of the relevant statutes, including the buyer's guide, and I'll also pull the NAIC documents, which may be meaningful for the committee to look at, just so you'll have, to the extent there are documents that have been gone through the process of putting together, which have been vetted by both regulators and the industry.
Okay,
might
well,
be meaningful.
how would House Bill 193 change what's currently being done? Because I know Representative Hughley talked about, once you reach age 60, you have to send out a notice to everybody. No, but in the big scheme of things, how will 193 change what Representative Hughley does, considering she sells life insurance?
Well, it will increase the obligation ultimately is going to be with the insurer, and it will essentially shift a bit of a burden over to the insurer. If memory serves on the law, it's either at age 60 with 5 or 6 prescribed events occur, you have to give notice, which contains kind of a description of a variety of options you have, life settlement, what have you, or if you become disabled with
but that's only if a premium lapses, or age 60. What if at age 61 you have one of these life-changing things happen to you? You got your notice at age 60, and it happens at age 61 or 62.
Under the law, I think if you develop a chronic condition, irrespective of the age, I believe.
But she won't know that.
Yeah, so that becomes there's a similar issue that pops up with coordination of benefits. When you become disabled, there's a significant change that occurs to the benefits you get under a health policy. So to a certain extent is how do you communicate that information, and there's no easy way to really do that without kicking that burden back to the insured.
Okay. Well, there's another way too, And I haven't heard anybody reference this, and they may have referenced it in the two previous meetings. We've all heard reverse mortgages. It's not the mortgage company that's advertising that. It's the companies who do the reverse mortgages. And if you don't believe that's true, come down to Columbus and turn it on TV station at 7:15 in the morning. You'll hear the Fonz every morning at 7:15 talking about reverse mortgages. And you know, he's not in the mortgage business. It's the life. In this particular case, if you switch it over, it'd be the life settlement people making that pitch. And they're doing that to a certain extent because when Representative Rogers introduced this bill this past session, he and I were talking, and I told him I heard one of those advertisements on the radio as I was coming up from Columbus that morning. So you know, there's more than one way to get the message out. So yeah, I understand it becomes the policy owner's responsibility, and we all have to assume a certain degree of responsibility because, and I also feel that it's the agent who is the ultimate power here because they have the knowledge, and it's my responsibility to go see her and let her explain to me what my options are. So, okay, go ahead.
I just wanted to ask the commissioner's representative about what do you all do when if somebody says that I should have been told about whatever, what do you all do? And how many complaints do y'all have about agents not disclosing or being told that they can't disclose information about life settlements and that kind of thing?
Starting with the second question first, I'll look at that, and we should be easy. Hopefully, we've coded it in a way where it'll be easy to pull that data, and I'll distribute it to the group. But if there is a provision in the law or the behavior that you're describing where they're not disclosing something, they have an affirmative duty to disclose either by the law or through their policy itself. What you look for from a departmental perspective would be pattern practice. If it's a pattern practice, then under the Unfair Trade Practices Law, we would have the ability to start a market conduct investigation. So we would go to the company and pull 100, policies with certain attributes. And if after that review you find an issue, then you move forward with either issuing a market conduct report with a fine or just going forward with a show cause order with a fine. So that would be the process and procedure internally. For an individual complaint, though, our Consumer Services Division is pretty good about handling the individual cases and helping them. So in that circumstance, if there was, if the complaint came in at a time where you could do anything under the policy, revive the policy or what have you, our folks would know that and give that advice. But if it is, something they can't do anything about, or if it's a practice that strikes them as violative of the law or the contract, then there would be a follow-up letter that would go to the company asking for a response, and then they would respond. And if you get a few complaints about the same company, similar issue, then it kind of rises to the level I mentioned before, pattern practice, and so it becomes a real enforcement event.
Just as an aside, Mr. Chairman, if you will indulge me, when a company no longer writes, or in the cases of older policies, and there is nobody to contact, what does the department have to offer citizens? I had a complaint the other day about they wanted to know about a policy, but there was no apparent agent for the policy. So what happens in those situations? Should I send them to you?
You can send them to us. With an insurance policy, any insurance policy, unless that insurance company has gone into liquidation, the book, you will never have a situation where you can cut off liability from the insurer's perspective as to contractual obligations unless it goes through a liquidation. And that's it. So either there's another company which purchased a book. Some of the older policies, particularly the smaller face of it policies, a lot of those were purchased, and the records to be frank with you, often are not real good. There have been a lot of resources put towards, in some of these circumstances, to finding a lot of the documents and putting together user-friendly interfaces on the internet through the NAIC to go look up, do I have a policy, is there a benefit available, something of that nature. But if there's an issue like that, yeah, you can send it to the department, and insofar as we can figure out who the policy is with, we'll help connect that person to the insurance company, the proper person within the insurance company to bring the issue to.
Okay. Any other questions? All right, don't see any. Thank you, sir.
Thank you.
I understand there's somebody here from Toccoa. You'll be next. I think you wanted to speak. That was the message I got. Identify yourself.
My name is Barry Hunter. I'm from Toccoa. I've been in the life insurance business. My first policy I sold in 1968. When I was 18 years old, I didn't go into the business full-time until 1972 after I graduated University of Georgia with an insurance degree. Been in insurance 43, 44 years. If there was a title of what I'd like to discuss is options and ethics. We've been going through all of the options of a life insurance policy, and for an example, your client, as you talked about, I'm going to make it as simple as I can. Let's say you had a $200,000 policy. It was a $6,000 premium. You've been paying on it for 25, 30 years. You've got $100,000 worth of cash value, and you call your agent, who's typically not in the business anymore, or the insurance company, and ask what my options are. They typically are going to tell you that you can use your cash value to pay your premium. You can surrender the policy and take your $100,000, no longer have a policy. Or you can take a loan against the policy. And if you took a loan for $100,000, for example, to keep it simple, the next year you're going to get a bill for $6,000, plus if it was an 8% contract, for another $8,000. So now you're paying $14,000 for a $100,000 policy, even though you started off with that $200,000 policy. What you have virtually done when you accumulate a lot of cash value is you have self-insured your policy. So if the man died and he had a $200,000 policy, and he's got $100,000 in cash value, typically the company's going to keep the cash value, write the check for $200,000, so you've self-insured part of your policy. Most agents don't understand all of the options, the waiver of premium, the things that you've been going through today, the long-term care, nursing benefits that are inside the policy. They don't understand it, and some agents have been informed not to discuss the settlement side. Now, for me to keep an insurance license through the insurance commissioner, I've got to take continuing education every year. 3 years of our education is ethics. What does the ethics tell us to do? Your client comes first. You've got to provide them the proper coverage that satisfies their need. You've got to explain the coverage, give them all the features and benefits of the policy. So if an agent, if that particular $200,000 client, policy holder, no longer needs the policy because his circumstances have changed, his children are up and gone, spouse may be gone, he no longer needs the policy, can't afford the $6,000, obviously doesn't want to take a loan to pay $14,000, those are the options that they're going to give them. But if you go to an agent that does not describe all of the features and benefits, one of which being a settlement, is he being ethical by not giving all of the information because he's been informed by his insurance company to not discuss the option to sell the policy if that's what he needs to do, and that, of course, policy wouldn't qualify for a settlement. So what I'd like to do is describe to you what I see is going on with my clients recently. This past summer, I've had $15,300,000 worth of death claims. One policy one client was, I sold him $2 million worth of life insurance in 1988. The illustration insurance company proposed was one was $1 million and two were $500,000 policies. The $500,000 policies, the premium was $12,000 a year, and if he paid that $12,000 every year, by the time he was 95 years old, he'd have hundreds of thousands of dollars in cash value in that policy. Well, he passed away just before his 93rd birthday this past August, but over the past 7 years, every month, I had to go to his house and collect the premium, the minimum mortality charge, to keep that policy in force for the next 30 days, which was $6,250 a month to keep that policy in force, which is $75,000 a year. Originally started off at $12,000. That wasn't the most pleasant day every month that I had. Well, the policy is owned by a trust. So I met with a trustee and their CPA to see what should we do. Shall we just let the policy go? Which is what insurance companies, I don't care what they tell you, this is what they would love to have, because that wipes out a $500,000 claim that may be the next day. The more seniors that they can get off the books, the less claims that they're going to have. Fortunately, 8 years earlier, we had the $1 million policy, which, as those premiums were increasing, we did a life settlement and got $500,000 for that policy. If I was smart, I would have settled both of those policies, because they would have had $1 million worth of cash. It took that entire $500,000 worth of settlement benefits that we got to keep one $500,000 policy in force. So we spent another $500,000 keeping that $500,000 policy in force, and our only option was to keep paying so we could at least get back some of our premium payments. I had another client pass away in July who had a $5 million policy, which the premium was well over $200,000. Owned by a trust. The trustee is a CPA and an attorney. The premium came in, sent the premium to the insurance company. 30 days later, without any other notification, your policy has lapsed for non-payment of premium. Well, we had to hire another attorney who was familiar with this case, because we've had problems with this insurance company in the past. Sent a letter to the insurance company along with the copy of the return receipt for the premium that was sent. 30 days later, a form letter comes in, says, "We have now found your premium. Congratulations, your policy has been reinstated. Thank you for your continued trust in our company." I have a law firm that is begging me to become an expert witness, because they get calls all the time about insurance companies who are doing the exact same thing to their clients, because if they can get these seniors off of the books, that's where their income is going to start really generating, where they don't have to pay claims. I understand from the earlier conversation that they're working on very small margins. Well, how do you increase those margins? You don't pay claims. If that $5 million case, if he hadn't had that certified return receipt letter where they received that premium, they would have argued that case, and we would have been talking to the insurance commissioner about it. Got another client, same thing. Claimed they did not get the premium. It's not an unusual thing to try to get out of claims. You're talking about the advertised on television. Anytime you turn on the TV, you hear one call, that's all, those guys. The property casualty business has been doing this for years. It's called redlining. Decline the claim, because there are only so many people that are going to go out and get an attorney to fight to get that claim paid or the proper amount paid. In my opinion, it's rolling over into the life insurance industry, because there are only so many people that are going to go back and fight. Now, you are getting some complaints about customers. I've been in this business 43 years. I've never had a customer complaint. I've taken care of my clients. But most agents, or if you don't have an agent, you probably, not you particularly, but most people don't understand all of the features, the benefits of an insurance policy. There has been in every policy that I've sold since 1968, the assignment clause. You have the right to assign for value your policy anywhere to anybody you want to. It does not say that you can't sell the policy. You can't assign it to a life settlement company. It doesn't say that you can't assign it to your grandmother because she loaned you some money. You have the right in that side of that policy to assign it. My dad was one of the largest producers in the state of Georgia, if not one of the largest in the country, who died in 1975, shortly after I got into the insurance business. He said, Barry, your client, you work for your client. Your client pays you. The insurance company just gives you a piece of the action. So as long as you take care of your customer, you're going to be just fine. And that's about all I have to say.
Okay.
I'll be honest with you.
Anybody have a question? All right. Well, thank you, sir.
Thank you.
Mr. Stuckey.
Mr. Chairman, I'm John Stuckey, representing AIG, and with the chair's permission, I won't entertain the members by trying to hobble over there. AIG has written statements. If I could ask my assistant to pass these out to the board members,
Okay.
that would be satisfactory.
Thank you.
Thank you, sir. So you don't want to make any comments, huh? Just let us read this.
I'm just going to let you read that.
Is it bedtime reading?
Pardon?
Is it bedtime reading?
Bedtime reading, and if you want to, you can, well, no, you're not going to be able to see me on Dancing with the Stars,
Okay.
This season.
All right. Okay. Well, is there anyone else up here who has a comment on this particular issue? Because we've got one more little issue as it relates to life insurance that we want to hear. Representative?
Sir, slide over here, Mr. Chairman.
All righty.
Y'all can hear me better? And thank you, Mr. Chairman, for giving me the chance to speak today on this little bill, this little disclosure bill that I had. I want to begin by, I know you guys know, but so that everybody will know, I am not an insurance man. I am a long-term care provider. So this bill that I had, this House Bill 306, began with my 25 years as a health care provider who deals in the private sector, long-term care insurance. I do services for any number of payors, but certainly a lot of Medicaid. And so what has been very obvious to me all through the years is the number of people who are trying to qualify for Medicaid. They need long-term care services, and I would remind everybody here today that our age, blind, and disabled population in Georgia, huge expense in Georgia. We have a $9 billion Medicaid program. 25% of our Medicaid program is age, blind, and disabled, but 57% of our Medicaid expenditures are age, blind, and disabled. So the people that I serve every day are the most expensive of the most expensive. They are people that are in nursing homes. They are in assisted living facilities. They're getting home care, which is what I do. I do home care and assisted living. So they're getting services through Medicaid. That is clearly absolutely most expensive part of the ABD population. And so we've got this tidal wave, as I refer to it, coming. We got 10,000 people a day in this country becoming 65. 70% of which will need long-term care services. And so here's what I've noticed all through the years, and I've seen this myself all these many 25 years. Somebody needs Medicaid. They go to the bureaucracy seeking Medicaid eligibility, and they're advised on how to become Medicaid eligible. And we all know how that works, and we have constituents that we help in that regard. And so they go down there to try to understand how to become Medicaid eligible. Well, you can only have $10,000 in life insurance and be Medicaid eligible. So what I have seen again and again and again all through the years are people that are just discouraged or encouraged to drop their life insurance. And indeed, we know that about, 90% of life insurance policies, I'm told, are abandoned. And so, so many people that we serve had life insurance, but they abandoned those policies. They abandoned those policies because they need Medicaid. And so my bill is real simple. It was absolutely the simplest thing I could think of, and that is simply a disclosure bill that encourages the bureaucracy, okay, dealing with Medicaid eligibility, to simply make sure that people are aware when they're seeking Medicaid that there is another option. And that other option is long-term care benefit plans. A long-term care benefit plan every American has a right to. You have a right to negotiate this life insurance into a long-term care benefit plan. But I tell you, I don't know that, 2 people out of 1,000 on the street are aware that they have the ability to do this. And certainly seniors don't. And so there is this option that will allow people to privately pay longer so they're not dependent on government, which is what Medicaid is, medical welfare, folks. I mean, that's what it is. And I'm so thankful it's there. I do a lot of those services. And we're talking about the most needy in our society. They need these services. But if people have an opportunity to private sector take care of themselves, they should do that first before going on the government dole. And there's this option out there of life insurance that can be, and they don't see it as an asset. They don't understand it. And so what I wanted to do was to educate people, to say, think about this. Now, we could more broadly educate everybody, and quite frankly, I think we should do that. I will just tell you that. That's not what this bill was about. This bill was expressly about Medicaid. But I think every consumer needs to know that they have the opportunity to convert a life insurance policy to a long-term care benefit plan. I think there's de facto evidence that nobody knows about it. Legislative counsel I talked to, the lovely lady that did this for me, she was not even aware of it. Most people are not aware. And so I think it's good to let consumers know what their rights are. But what I was purposefully trying to do is make sure that we let people know, if they're interested in Medicaid, that if they find a way to do it privately first, that they will have more choice. They won't be limited to Medicaid choices. They'll have any choice that's available to them in the community. And they'll be able to be independent longer. And once they spend down those resources, then they go right on Medicaid. And again, I will just say that the majority of our long-term care services in this state are paid for by Medicaid. 73% of nursing home revenues in Georgia paid for by Medicaid. And so this is a huge burden on taxpayers. Our Medicaid budget, that $9 billion, is going to continue to grow and grow and grow because we're getting older every minute. And I believe this is about the simplest, most commonsensical thing we can do. Let's encourage people to first be aware that you have another option and look at that as a way to maybe stave off Medicaid for a season. It may only be a year. It may only be 6 months. I don't know. It may be 5 months. But every month that we delay access to Medicaid, we save money for taxpayers. Mr. Chairman, that's really all I came to say today.
Yeah. Okay.
How many, do you have any numbers on how many people who are at the cusp of being Medicare, Medicaid,
Eddie, I do not. And,
would have insurance?
Well, here's what I know.
Life insurance.
I don't know. I've been unable to get that information. I did get a fiscal note on this bill, and quite frankly, I don't think they understood what I was trying to get, to be honest with you, because but what we got in the answer was we can't really tell what this is going to do because we don't know that you just asked. So it's here's what I would say. I can only tell you what I see in this world all through the years. We have new people every day applying for Medicaid across the state, and typically they have assets and they're seeking counsel on how to spend down those assets. Most of them have life insurance. Now they're going to continue to need life insurance.
You're saying
for
they have life insurance in force? I mean, they still have life insurance in force, yet they're
most
at
of the time they do. Now, oftentimes it's going to be too little to do anything like this, but in many occasions they're going to have $50,000 or $100,000 life insurance policy. But we certainly need to encourage people not to walk away from life insurance policies and just to go on Medicaid. Because what happens is the dynamic that we live with, when we deal with families and they're looking for services, they're desperate. Because remember, nobody plans on, the life insurance, the insurance folks in the room will know this. We in this country, 1/4 of 1% of Americans buy long-term care insurance. So that tells you how much we think about aging. We don't think we're ever going to age. So what happens, we're dealing with families when they're desperate. They never thought that mama was going to need to be in a nursing home or needed to be in assisted living or needed home care. And now they've got to find a way to pay for it. And so they aren't thinking that way. And when the time comes, what they're ready to do is say, what do I got to do to get her in that nursing home? Well, the easiest thing to do, because the entitlement in this state is nursing homes, okay? Private sector is more difficult, not only because you got to pay for it, but you don't have to jump through, you have to move them maybe once or twice or 3 times.
So
nursing home route is easy.
So life insurance, so
I forgot you
long-term
had as
care.
well. That's right.
Familiar, and I'm walking through the process with an elderly relative of
Right.
Medicare, Medicaid. So kind of understand all the dynamics there. And the one thing I know is, selling life insurance is not something that's, it's not the simplest thing to sell or to educate
Sure.
people about
Sure.
their needs and make them aware of it. And even when you educate them, actually doing something about it. So I was just curious to know, in your line, in what you dealt with, how many people you actually encountered that had life insurance still in force if they were at that cusp of seeking
Right.
eligibility for Medicare.
And Eddie, I'm sorry, I can't really, I said too much, but to say I can't answer that, honestly, I can only answer it with, what I've seen. Because remember, when people come to us, they now are getting services. And listen, this bill does nothing for me. I'm going to be paid by Medicaid,
Right.
just as well as I'm going to be paid private pay. It doesn't matter. But to me, we should be about independence, not dependence.
Sure.
And so that is
For
what I'm
those-
all about. I'm going to be paid either way, because when people need to be served, they're going to be served.
For those that are in that situation that you described,
Yes, sir.
very much agree with you. I'm just
So-
asking.
Yeah. When we get them, they've already been approved, so I can't answer concretely how many have insurance, but I would love to know that as well.
Quick question.
Yes, sir.
How do you propose educating the folks who have the life insurance of this option,
Well, what I envision,
other than
Chairman,
going through an agent?
Well, actually, Mr. Chairman, what I envisioned was this. The termination for Medicaid eligibility, unless someone is SSI eligible, is done through DFACS. What I wanted was what I mentioned earlier. I referred to it as the bureaucracy. The DFACS bureaucracy that guides people to Medicaid eligibility, I wanted them to be knowledgeable enough and to be able to present information to people to say, here's another option. That's really all I set out to do.
Representative Hughley.
Thank you, Mr. Chairman. In your research for this bill, can you give me an idea of the marketplace for what you're talking about? The companies that would participate in this and all
I
of-
do
all of
not.
that?
I will tell you this. There's a group out of Maine that has been very involved in this, and there are 2 states that have passed bills similar to this. Kentucky and Texas have passed a bill very similar to this. Let me just put it like that. I can't tell you it's concretely the same, and those are very recent. So I cannot tell you exactly how many agencies would help people to create these long-term care to transition into these plans, but my understanding is that there are ample folks out there who can do this. And basically what it allows people to do is to get some benefit out of that life insurance rather than walking away from it. But
One other question,
Okay.
and that is on the numbers. It always concerns me when we put a dollar number in legislation because things change over time. This $5,000 amount that you're going to let them leave in life insurance, how'd you decide on that?
yes, that came from that was part of the Texas bill. The goal was to make sure that you should have to require, in my opinion as well, that there is enough left for burial.
I see.
That needs to be done first and foremost, and then the balance would be negotiated into this settlement, this long-term care benefit.
Representative Dollar.
Thank you. I apologize. I'm coming from another meeting. You may have said this before. What did DFACS say when you went to them? I'm assuming you came to them before you introduced the
I
bill.
spoke to the commissioner.
Yeah, just to see if they could do this, within the rules. And did they say that such an action would require legislation, or were they just not receptive? Or
Yeah, I didn't get a very concrete answer. I would say that the answer, I think, I guess I would best describe it as if we find value to it, they will do it. I will say that the fiscal note suggested that it's not going to cost anything for the department to do this. I mean, you're talking about, you have individuals who are DFACS, they're called MAO workers, medical assistance only workers. So we have MAO workers throughout the state. They're already out there determining eligibility. They just need to be educated and then know how to explain this to families. So it's really not much of an impact. Could the department do this, though? Absolutely they could. Mm-hmm. They could choose to do this. But I don't believe I don't believe that's going to happen. It certainly hasn't happened up until this date.
Did their attitude, did you notice any change in attitude before or after? Change in, I guess, temperature before or after the bill came out?
I did not, but as my seatmate knows, I'm a new guy, and so I'm still learning. But most of the time, when you talk to the departments, I mean, I think they're interested in listening. They don't really weigh in with an opinion too strongly one way or the other. That's been my very freshman opinion.
Mr. Chairman, do we have anybody from the department here?
Yeah.
Okay.
Trey. Insurance department.
And I did not. And I have not.
Not the insurance department.
I have not spoken to insurance
Yeah,
department.
DFACS, no, I don't think so. No.
So this is really a DCH thing. It's really it's a Medicaid thing.
Mm-hmm.
So, but at any rate, I appreciate the opportunity to mention it to you.
We'll get to hear them a little later, I guess. Okay.
All right.
Thank you, sir.
Thank you, Mr. Chairman.
Representative Hughley.
One more question for you. As you know, when somebody goes into a nursing facility, they only let them keep such a small amount of money.
That's
so
right.
in most cases, they don't have enough money to pay their insurance.
That's correct.
Anyway.
$50 a month. Is
Right, I'm
about
saying that's their disposable income. So
That's
in
right.
most cases, that's why those policies are being walked away from, because they can't have enough money to pay them.
That is very true as well.
Okay.
Very true. Yes, ma'am. Thank you again.
Okay, thank you. Anyone else on the committee have a question or a comment they'd like to make? Representative, or Chairman Rogers said that I'll talk with him and he may call an additional meeting. I don't know. It's up to him and y'all, and once you've had a chance to talk with him. Any other comments? Yes, sir. Yes, sir.
This is Kurt Leonard with the American Council of Life Insurers. Again, I'll be quick. The lapse rate for policies has come up. I've heard the last hearing was quoted as 88%. Heard 85. I just heard 90% of our policies are abandoned. I just wanted to clarify the numbers within the numbers on that. The VAT, and I've got a LIMRA study and excerpts from it from a few years back. We had to do some spade work on this, was discussed at the NAIC. But the vast majority of life insurance policies that lapse are term life policies. And then in addition to that, when you look at the high dollar whole life policies, the lapse rate for them is far, far lower than that's typically considered. So even when a term life policy is converted into a whole life policy, as a matter of data, it turns up as a lapse. So even when somebody takes a term policy and converts it, it turns up as a matter of data as a lapse. So when you hear 88, 90, and 85%, whatever that number might be, I just wanted to remind the study committee of the numbers within the numbers. Thank you.
Okay, thank you. Yes, sir. Go ahead.
Number 6. So if we say 88, 90%, whatever that number is, and that could be a fair number of term policies, just like you mentioned. It'd be difficult to ascertain as to what percentage of those were, let's say I took a $500,000 policy and decided I wanted more coverage, and so I'd let a $500,000 policy drop, and I picked up another policy elsewhere at a better rate for a better coverage, right?
Mm-hmm.
I mean, we have to it's not that 88%, 90% of all coverage goes away. there's a certain amount of those, maybe a fair amount, that get more or less, we replace it with a different policy. Is it correct?
Correct. And that can be a little misleading when you just hear that number getting tossed. Whatever that number might be, it can be a little bit misleading. So.
Okay. Thank you.
All right. I don't see anybody else's lights on around here. Goodness. An hour and 10 minutes. You gonna make it to Augusta? You're gonna make it to Augusta. All right. Appreciate this. Just so you'll know, on life and health policies, legislation, Representative Darlene Taylor is the chair of that subcommittee. So once these things kind of get fine-tuned or whatever happens to them, that's the committee that it'll go to in insurance. When we have our first full insurance committee meeting in January, then at that point in time they'll be assigned, and then she'll start holding hearings on the life portions and whatever else. There's some other health issues in there too that she's gonna have a busy year with Mag and everybody. So, all right, appreciate y'all. Y'all have a great day.